Hello, everybody, and welcome to the show today. I'm really glad you could join us. So with us today is two special guests, and we're talking about one of my favorite topics, how to make it easier to get access to the money that you need. So for everybody right now that's going through COVID-19, you know how difficult it is to get money when you need it. And a lot of people are learning firsthand the difficulties of not being set up the right way and then trying to go in when you desperately need money and trying to do it. And today, I think we're going to successfully solve that problem. So with us today is John Matheson. Now, John is the CEO of Leverage, a finance software designed to help business owners and commercial property investors make more informed financing decisions. Now, this software that John has created allows users to calculate transaction data against today's standard commercial underwriting guidelines and to determine the likelihood of a funding request getting approved. Now, with Leverage, John hopes to not only educate business owners, commercial property investors, and entrepreneurs, but also give them a sense of empowerment before walking into a bank. Now, in addition to Leverage, John is a managing partner of J. Healy Development, LLC, where he focuses on eco-friendly and sustainable commercial development to lessen a property's footprint while increasing its values. For nearly 30 years, John's been developing, permitting, and or financing completed projects totaling over $50 million and primarily focuses on multifamily, mixed use, storage real estate. Now, John is a business owner and property investor and has survived 3 recessions throughout his career. We were just talking about that a little bit before we got started, and has come out stronger each time. Having a conversation with him is going to be awesome today because he's joined with his partner in crime, we'll say, Stormy Scott. Now, Stormy is the business development manager for Leverage, and you've already learned a little bit about what Leverage does. Now, Stormy began her career at Wells Fargo in 2016, and through hard work and determination, she advanced herself within the banking system and became a branch manager at People's United Bank. Now, during her time in the banking industry, Stormy saw firsthand some of the struggles that business owners face when seeking financing, and her experience inspired her to want to help create a system to empower better outcomes for all small business owners seeking financing going forward. So with Leverage, Stormy hopes to provide small business owners, entrepreneurs, and property investors an advantage in the financing process and empower them to start the funding conversation like never before. So John and Stormy, thanks for joining me today.
Right on.
Thank you.
Well, I'm really excited you could be here because this is the second time I've had the honor of John of having you on this show. And it's really cool because like we are passionate about exactly the same thing. This system is broken. And if people have better information going in, then they have a way better chance of getting approved. And it's better for the banks too, because the banks want to have these pre-screened qualified applicants teed up to them to avoid all the fraud cases and everything we have. So I'm just really excited with what you two are doing here with Leverage.
No, it's good stuff. And you said to me a couple of years ago when we first met, right, over software, and the use of technology is so important to be able to advance yourself today. But you and I both just condensed it down is, whoever's listening today, right, out there that we can help, who wouldn't want to know what they pre-qualify for before they apply? Stormy gets out there, and we'll bring her in as our business development manager. She gets out there into networking groups and women's groups. And Stormy, what did one of the women leading a large group just say to you?
This is an answer to a prayer. It's amazing, right? What they say. I mean, when it comes to, especially I can speak from me, before I do anything as a woman, I do my research. Before I go to a restaurant, I'm looking on Yelp, right? And I'm trying to see if they have good food before walking in. And speaking to different women who are in business, that's their main thing. Walking into the bank, they don't know what the outcome is going to be. And so it scares them. And what we have gives them the empowerment walking in. It's awesome.
Yeah, what do you think that the system is so broken? Because I think it's partially because of fraud. Stormy, you might be able to speak this better because you worked within the banking system directly at Wells Fargo. But it seems to me like the system is very broken because like if you just tell me what you need to qualify, then I won't waste your time with applying if I don't meet the criteria. But it seems like so many lenders and credit issuers just want everybody to apply and then only to be let down with a denial. And it doesn't seem like it's in their best interest to disappoint the people that could be their customers. So why is the system broken? Why don't they just tell us up front what they need and not waste everybody's time?
Wouldn't that be nice? No, I completely agree. On the front lines, we're kind of like order takers. They want us to go, find business, have people apply and see what happens. And what I come to find out is when people come to me as a branch manager, they just weren't prepared to have the conversation. And so if we could have the borrowers coming in prepared and being able to answer the questions that I'm asking them correctly, I can't tell you how many times I'm like, what was your revenue last year? And it started with, I want to say I estimate probably 80,000. Okay, I have to take your word for it. I have to get the application submitted, and then I'm running around for the borrower to provide documents that the underwriter is needing, and I don't get that, and the underwriter's like, next, declined. I need to move on to my next file. They want the perfect package from the start, and if you don't have that, you're not going to have a good outcome.
Yeah. And like you and I have talked about, Ty, each bank, when we talk about commercial real estate property investing, we know that the underwriting is pretty uniform. So our software that deals with the multifamily or mixed use or commercial product purchase or refinance has embedded in there, you give it that you tell the software the NOI, it computes your debt service coverage ratio. It doesn't have the third component, obviously, which is valuation. So, but those are the three things a lender is looking for: NOI, DSCR, the debt service coverage, and then what's it worth? Is it a cap rate analysis against net income, or is it a market analysis? One of those three things into a lender immediately should be able to get you an answer today on your property purchase. But if you and I go in for a credit line on our widget business, right? And we say, well, we want, like Stormy, we want that $80,000 credit line to survive COVID-19. And here's our numbers from February that we were doing good, and now we're not doing so well, but we will be by the fall if we can project any kind of return to normalcy. We're now beginning the dialogue differently with a lender than what's ever been done before from what I think is going to be lending on the other side of all this. But you and I know credit lines are underwritten institution to institution differently.
Oh, yeah.
They just don't tell us. And it's, Stormy will probably tell you, Stormy, when you were at the front line, did you even know, did they even tell you in the large institutions how they were underwriting people?
No, we didn't necessarily know the carve outs and what DSCR that they were looking for. We just had, here's the requirements that you need to meet. And my financial institutions, because the specific borrower didn't fit in my box. Well, they fit, they found somebody that they did fit in to be able to do their transaction.
Yeah, and that makes a lot of sense, because that's exactly what I see and what I've heard, Stormy. And, the CEO and my business partner here, Megan Christensen at Credit Suite, used to work for a big bank, which she said she's not allowed to disclose who it was, but they have like a Stagecoach and stuff in their logo. And I'm sure you're probably familiar with them, Stormy. But anyways, I was told that underwriters aren't even allowed to communicate with front-end bankers, where like a front-end banker can't go to an underwriter and figure out why a deal's turned down and then even communicate that information to the customer, or it's potentially a fireable offense. So is that really the reality? Is it really that bad?
Through my experience, I didn't have a lot of communication with the underwriter. They were very hard to actually talk to and get on the phone or even get a response in email. The main person that the person is going to be working with is the processor. And only they're able to gather so much information from the underwriter. So it's a very back and forth and not a clear answer. And that was very frustrating for me when I'm the one who's built the relationship with this customer and I can't give them, a straight answer, or it's not a good feeling.
No, it's interesting because you and Megan should talk, because the two of you have the exact same frustration. Worked for the big bank, got frustrated that you're turning people down for reasons that were completely preventable if you were just able to communicate clearly with the customer and then go out in the world to solve that problem. So kudos for you. But let's talk about the solution, because how can tech help solve this problem?
So before she jumps in, I want to comment on what the exchange you guys just had, because I love this as the entrepreneur. So in our software side, I represent vehemently our entrepreneurs and our business owners, because I am one. So I'm the borrower. So we just heard from the lender. And what did we just hear is happening in lending, right? We're hearing that we have branch management personnel who really care about us as the borrower, who are under a lot of pressure to actually get numbers into these institutions. Like you said, some of it even ended up being fraud-based, right? But they're under a lot of pressure to get people to apply for credit lines and to do business as a business person at their bank. when we study the statistics in the market, people have published studies where around 15% of small business customers change lenders every year. So if we applied that across the board, even our large institution that we just talked about becomes a zombie in commercial banking in 6 years if it doesn't renew its customer base. So they do need to tell people like me yes at times to be able to keep the customer base going. So how do we, like you said, with technology, how do we communicate with this lender to give them what they want, because they really do want to give us the loan? So how do we fit into their box? How do we do this? Your company works on it every day. Leverage software is designed in 5 minutes or less for you as the business owner or borrower to fit in your numbers and to determine whether or not you fit into the box before you ever speak to them. And I like to say to Stormy, what would have happened for you sitting at one of those large institutions in a position where you were meeting the customer for the original loan app? If somebody had come in and given you the one-page leverage report from our software that says that they were good to go for their credit line, what would you have done?
I would have been floored. Because like I said earlier, when you start having that conversation with somebody and you're trying to discover what's the purpose of the loan, why do you need it, then I start going into asking, like, I just shoot questions out. You know, let's talk about your credit score. Let's talk about your revenue. What do you have in receivables right now? And with this one sheet, I can look at it and read it in less than a minute and say, wow, this answers all of my all my beginning questions. And I'm going to be able to tell you if I continue this conversation with you or if I can't. So can you fit in my box or can you not? And it saves so much time for the borrower walking in, and the borrower knows a little bit more what to expect. So there, for me, it makes my job easier.
Yeah, and another big problem I see that it fixes, and I talk about this all the time, is, you know, there's this organization, the Small Business Financial Exchange, the SBFE, that's owned by banks where they openly communicate information with each other. So what you described is very real. Somebody comes in, you say, what's the revenue? And they're like, you know, it's about X. And then they don't like what you have to say. So they go to next bank and they go, it's about Y, and it's a little bit different. And then that creates all kinds of issues because people don't realize that this information is being shared between the banks. And then it makes it look like it's fraudulent because what they told one bank isn't what they told the X. And they're not trying to lie. It's not fraud. They just really don't have a grasp on their numbers, which, let's all be honest, this is very common with most entrepreneurs. You know,
no,
so
I couldn't agree.
Go ahead, Stormy. I mean, I see that as a problem. So I think it's kind of an expansion off what you're saying, is it just these banks communicate, we don't know they're communicating. And then what's happening is when you don't know your numbers, then it gets you a major chance of getting declined. But like you said, if you come in and have it all done beforehand, you know your numbers. And if you go to another bank, then they know the numbers. And then at least the information is congruent, and it radically reduces that chance that application is denied for fraud concerns. Is that right?
Spot on. I mean, as a business owner, you can speak your business language all day long. And as a lender, I know you don't speak the lending language. And so being able to come in prepared with a one sheet of paper that speaks that language, you can communicate with the lender more efficiently to be able to get what you need done, because you're there for a reason. You're there because you want to grow your business. You're trying to put something, you know, in line to help you weather an emergency for your business. And you can find that really faster just through that one piece of paper.
Sure. And, you know, John, what you said about it's very real in the world of PPP loans, right? Because you talk about 15% abandoning their bank year after year. Can you even imagine how high that percentage is going to be with the frustration that's out there right now with COVID-19 and how these PPP loans are handled? It's astonishing how bad the banks are handling this application process. So, John, like, what do you think?
So,
how real is
a couple
this
things
in the world
happen
we're in
with
now?
the PPP loan, which we know.
Now say that again, John, because you cut out.
No, yeah, we were both kind of cutting out. Am I back? So,
yeah, you're good.
So
you're good.
This is the running joke, Ty, with me. So I own a tech company, but it doesn't mean I own Zoom or the internet, right? So we do what we can. So no, you are so right. So let's break down PPP, you and I. So we've got 30 million small businesses in this country at any given time, as defined by the SBA, people with under 500 employees, right? 30 million or more. 22 million of those are sole proprietors of one or two people or less, right? So then from there, around 20 million use some level of bank credit. 20 million people. So if 20 million people are using bank credit and only say 3 million get the PPP, we've got anywhere from 17 million to 27 million underserved small businesses in this space.
Yeah, very much so. And that's what it's going to come out to be. I mean, all the statistics show that best case, we might see 10, 11% of small business owners that need help getting that help. And a large part of the ones that didn't, and it's a disaster. Like if you look at our scenario, like the bank we got our PPP loan through, this is literally how it went. We submitted the application on Sunday. We were funded on Wednesday. But yeah, we had applications in with our bank and with another bank for 3 weeks, and they did not even get it to that point. So then the question becomes like, do you think we're going to stay with the bank that we've been with when they failed us? And then another one came in that we had no relationship with and succeeded in days. It's just, I think that this is a huge problem, and it all literally comes from not having your stuff organized and straight in the beginning. And I think that that's a large part of the problem is that people try to apply for these PPP loans. And I'm like, from my standpoint, we were prepared. Our documents were there. We had our stuff ready. But I forget how many are like what Stormy describes. They weren't prepared. They didn't have all the docs. And that's what backlogs and backs up the whole system. So how does tech help us leverage, or how can we leverage tech to fix that problem and be better prepared to make the process smoother when we get into the bank? John or Stormy? Hopefully you guys can hear me okay. So my question is—
you're back. Yep.
Okay, cool. I don't know. What's like my gerbils need to run faster. Somebody's gerbils, all of our gerbils need to run faster for our internet.
Yep.
So that's my question is, how do we leverage technology to be able to come in and be able to actually have the best chance of getting approved for financing when we need it, whether it's through the COVID-19 or well after?
So that is the exact question that we asked ourselves back after the last financial crisis, when there was a disconnect between borrowers and lenders over what was going to happen coming next, because there was a whole different contagion back in 2008. But the results of the next couple of years were the same as how do you do normal commercial banking as a business borrower with your lender when you had such chaos in that environment. So the bridge between the two had to come from technology. So what we always what we recommend to anybody is you always use the modern tools available to yourself to do business. Mm-hmm. Today, if we're going to do a document, we're going to open up Microsoft Office and we're going to use one of the suites that are inside of there, be it Word, Excel, something to communicate documents. We also are going to use a cell phone to communicate, something we didn't have 30 years ago to use when I started in business. So today, when you have modern technology like Leverage Calc that you can use to be able to predetermine for yourself before you ever speak to a lender what you qualify for, it's incumbent on you to use the tools. They're there, they're created for you as a business owner. I mean, if you're even thinking about getting any kind of financing right now, you go to a site like Leverage Calc and you get involved in the tech now to determine if you're able to even do it. Then you can plan your business conversation. What is your conversation? So like you said, the other side of this, what I would recommend doing from what we hear from lenders, I'm going to take my numbers as of through February, maybe through January, maybe through February. I'm going to put them into the business finance calculator, or if I'm doing CRE, I'm going to put it into the commercial real estate calculators. And I'm going to get a result. Then I'm going to update myself with what happened over the last 60 days to my business. Then I'm going to do a quick projection of what I think is going to happen from August forward when things start to return to a level of normalcy. And that's what I'm going to show the lender. I'm in business. I was doing fine through February. We all know I'm not going to be doing the same through August in the type of business I'm in, but we know I can return to a level of percentage-wise normal. And you can see I can afford this credit line, which I didn't get PPP. I need the credit line to be able to allow my business to survive. And you and I both know, Ty, somebody does that loan.
Sure. Makes sense. Yeah. What about turndowns? Stormy, you're from the banking industry. So what happens? Does this technology help if somebody's been turned down at a bank to be able to then fix what's wrong or get their affairs in order per se, to then be able to turn around and possibly succeed?
Yes. So in Leverage, if you complete the software and complete your analyst, and you get a no in our software, so you put in your numbers that you told the financial institution, and one, you're going to get a clear answer and be like, oh, I see, I'm not able to cover. The software is going to be able to tell you, you're going to go back and play with it and see what needs to improve to realistically move forward to be able to obtain that line.
Makes a lot of sense. What about the loan process? Does this help automate any steps in the actual loan process itself?
So we stayed completely out of that for now. It's obvious that the 2.0 versions to us would be able to do that. But right now we stayed completely out of the live loan application process. We want the business owner or the property investor to be able to use it in the comfort of their own home or office, generate their own report, and decide if they want to download, print, and share with their lender or connect through with what we have. So that becomes their choice now. As technology improves and more user feedback comes into us, yeah, we would want to have the ability for all the intake forms and all the intake screens on the software populate into the bank or into the lender, but we haven't built those bridges yet. It's part of, I always laugh when they say that, what it costs to build the original Affordable Care Act website for it was like $650 million, right? And then I sit here and we build Leverage Calc, and I'm saying in the beginning, oh, this won't cost that much. And then you find out what it costs, right? Ty, look at your platforms that you have in your business. When they give you the original bids for tech, no one told you and we had to do times 10 to create it, right?
Yeah. Usually we double the estimate, and it's very much 5 to 10x. Yes, correct.
Yeah, it's crazy. So yes, all that tech will be there, but for now it's a download, print, and share world with your lender or with the ones that are through our system.
So what you're doing is coming in, somebody gets declined, for example, they come to you, they then go through Leverage, they're able to then get all their calculations, all their figures in order. And if they don't know where to go because they already burned with their own bank, their chances, then it even gives you the ability to go out and find other lenders that can work in their place.
Yeah, the favorite word we teach them is once that they can get that Leverage software to turn green and be a go, we tell them their favorite word needs to be next.
Yes.
Because if they move from lender to lender, somebody will do it for them if they are fitting into the box. And obviously, every file is different. People have their own situations that can be in existence prior to or after they actually have a Leverage report. We don't know what anything looks like on their balance sheet when we're doing cash flow analysis in the software. So different lenders, as you know, can address those situations differently for people.
Makes sense.
Yeah.
What about startups? Does this do anything to help startups, or do you have to be a pretty well-established business for it to work?
Yeah, so the startups, there's a pro forma field inside the software, and I tell them all, a lot of startups, you're taking family and friend money, or you're taking private investor money to get started in some cases. You use a software to show them how you're going to pay them back. And what's funny, because we have some of our customers who are parents who wrote in the beginning and said, hey, I want to be able to use this because my adult children keep coming to me asking for money to start their own business. Right. So the funny joke, well, have them turn the software green. It'll show them, that means in 2 years when they're bankable at a regular institution, they can get a credit line to return your money. So yes, it helps if I'm running a startup, you need to be able to use the modern day technology to determine that you're financeable on pro forma is just as effective for them as it is for anything else they could use.
Now, John, do you guys work a lot with all kinds of borrowers or all kinds of loan? Is it more guided towards commercial real estate?
It's pure commercial. So you can still use our software if you are a commercial or if you're a multifamily investor and you're buying 2, 3, 4 family units. But our algorithms are written in commercial real estate space for the commercial underwriting code book, if you will, that starts at 5 units and up. And then in the business finance space, we're purely driven for institutional credit lines. We're not about anything for consumer lending at all.
What about being prepared before you go in? So Stormy, besides what we're doing here with Leverage Calc, the question becomes, what else should a borrower do to be prepared for that initial meeting with an actual lender?
Have your documents. So another nice part about Leverage is we have a resource center. So it has a checklist of everything that you essentially need to be able to fill out the software correctly, to get a correct analyst. Because if you're putting in guesstimates of what things are, no, you need to look at your Schedule C, you need to look at your documents off of this checklist and then keep them. So when you walk into the lender and they want to continue that conversation with you, because you do have a go, you already have all the documentation that is ready. Because I cannot tell you how many times, like I said, I was chasing around people like, hey, I need this from you, I need this, and they weren't getting it to me soon enough. Well, that underwriter has a huge file, so they're going to say, if you can't get it to me by Friday, it's going to be declined and they're going to have to reapply. So making sure that you have your documents.
So what all kind of documents does somebody need typically together? So Leverage Calc actually helps you get all that stuff together. It's not, what kind of stuff does it help you gather that you're going to need?
So they definitely want to look at 2 years worth of tax returns. If you're just starting up, you've only been in business 1 year, whatever you've submitted. And then obviously if you have a profit and loss statement, anything of those documents.
Perfect. What about eligibility? How do I know that I don't want to waste my time? How do I know that I have a good chance of getting approved before I even walk in?
Doing your research on the lender, having that conversation with them, seeing what their minimum requirements are. That's one thing that I really appreciate from your leverage report, is what it asks you is how long you've been in business, what do you think your credit score is? So immediately they can see those qualifications and say, oh, my lender required a 680 credit score and you're saying you have about a 630. I know that unfortunately I'm going to have to recommend a different lender who has that requirement that's a little bit less. Or if you haven't been in business for 2 years, hey, I know a different alternative lender who can get this approved for you if you've only been in business for 6.
What are the common requirements to get these kind of loans? What kind of requirements does somebody really need to meet to get that Leverage Calc to actually show green?
So yeah, I mean, I can help you with that. If you're doing the commercial real estate side, you're putting in the income expenses on the property. We're looking at cash flow properties. The software ends up with the net operating income that you've given it. And then it does the carve outs above the line. So most of the CRE lenders, commercial real estate lenders, like that, because carve outs are things like management, loan loss reserves, and that kind of stuff that a lot of investors overlook, and they'll do after they've done the computation of NOI. So we're putting it all in there in the front end, which comes out more conservative. And then we're looking for a debt coverage ratio of over 1.25. So simply put, that means if I have 10,000 in expenses, I'm bringing in 12,500 on the property. So if your property covers that way, the software tells you that, and it's a very easy discussion to begin the conversation with a commercial real estate lender if you have that. That's the easy side. That credit line side is we're putting in information from our Schedule C off of our 1040 Schedule C, or we're putting in from our 1120 if we're an Inc. And there are things, as you know, that you can add back to those numbers to allow you to qualify for a commercial line of credit, such as home office use, business miles, your salary. There's all sorts of things, as you know, that goes into all that. So the software through tooltips takes you through your tax return or your pro forma to add all that stuff back in. And then it applies based on your industry, a interest coverage ratio to it. So it's a pure cash flow analysis tool to begin the conversation. We don't know what your lender is going to require for principal payback yet. So we're just analyzing based on cash flow. Can you interest cover for the facility that you're asking for? And then you put in all your existing facilities. You have a credit card, credit line, truck loan, wherever you have in your business, you put that in. The software then pre-underwrites you with all of those existing debts, plus it analyzes whether your new request is going to be determined to be favorable, and then prints you a one sheet of paper to begin discussion with the bank. So I love that, because as an entrepreneur, you and I both know this. If we're one thing broke, we're time broke. And we don't have a lot of time today to tell 50 lenders about our story. What we do have time for is one sheet of paper being sent in to a lender to get an answer next, until somebody, and you and I don't know, I could have a perfect loan file today and I could submit it right now for $100,000 credit line, and I can get denied, and it may have nothing to do with me. It could be a dysfunction at that institution today, given the current events. So you need to keep moving as a person in business who needs that credit line efficiently. And with technology, you can do it quickly. Bing, 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 and not have to spend hours on the phone with each lender just to get told no.
John, does this kind of technology help you make corrective actions before you even then, once you come through, you do what's needed to be done? Does it tell you the corrective actions to take to get yourself from unfundable to fundable?
Yeah, so the edit button's key, right? And you can get feedback from lenders, and you're able to go back in and tweak your request. Once maybe you have a lender say, hey, you got to pay down 2% principal on that. You sent me an interest-only file. So you can go back in and determine what the impact would be on your cash flow to qualify with that type of principal payback. Corrective action is key for us to be able to communicate with the lender. If I put in my numbers up front and the software says, hey, you're not getting that credit line, I'm actually feeling better about myself at that moment than if I submitted it to a lender to endure the embarrassment of being told no 4 days later. Right. So I'd rather know up front, hey, I don't fit in the box. Well, what box do I fit in? And then I go in for my box that I fit in, and then I say to our lender, hey, I've had third-party software vet my request. It says that I'm a go for this. Would you like to consider the conversation with me? That's a brand new way to introduce yourself to a lender versus how it's always been done, which is pick up the phone, schedule an appointment, or pick up the phone and start to tell a story to a lender, only to get told how many days or hours down the line, sorry, we can't do it. I'd rather find out right up front so I can keep moving.
No, I agree. And Ty, something that you really talked about was fraud. Who wants to go in and put all of their information, their social security number, their address, and all of these things, and then just have it floating? Whereas instead of cut it down, do the leverage report and then be able to show it to one lender, and you're not giving them any of that information. Your credit isn't getting pulled. You cut all of that. Cut all of it out. And it's going to save people from fraudulent and breaches and everything online and things of that sort.
Yeah, not to mention it's a lot simpler to just be able to go in that way too. This has been ingenious, and I love anything. I love what you two are doing. I just absolutely love it, because this is something I am absolutely determined to change. I think the system is inherently very broken when lenders do not communicate properly with potential borrowers and just help them understand what's needed to get approved instead of this current system as it is. So thank you two for coming in and sharing. Anything I should have asked that I didn't ask that people should know about leverage or about being able to set themselves up successfully to obtain this kind of commercial financing?
So before she jumps in, I'll just say one piece, right? Whenever you talk about software, we talk about how much it costs to build software. And then we talk about, the audience size that you're trying to serve and that we're trying to serve. We try to serve every single business person, right? When you're serving that many, you can keep the cost down. So people would react. No one would react anywhere weird if I said, well, our software is $1,197 to buy. And with it, you're going to be able to know before you apply what you qualify for so that you save yourself time, money, anxiety. People would be listening to me, they going, well, I guess if it does all that for me as a business owner, I've borrowed money before. I remember that agony, right? This is great. So then if I told you, well, it's only $497 and we're going to do a special today, you'd probably say like, well, that's a nice parlor trick and it's cool and that's good. But we wanted to go right out of the gate with this software based on current events and conditions and what we've done before with people in software, and just get it to them at a price where the money wasn't the object. So we made this available for 1 year for $197. So that part of it to me is like, if I can get for $197 a tool to communicate with my lender to get a $50,000 credit line in 5 minutes or less, that to me is a value. So I want to make sure we tell your audience that before they say or go, oh, geez, what's this thing going to cost? Money shouldn't be in the way.
Appreciate that. And that's phenomenal. And I love that you've made it so obtainable for entrepreneurs. Stormy, any final thoughts before we wrap up?
I definitely would love for everybody to check out our website. We have some great informational videos of how to walk through the software so you can see it. And that is leveragecalc.com. And then if you can also look at our Facebook page, which is @LeverageCalc, and Twitter.
Okay. Perfect. Everybody, hopefully you got a lot of great info out of today. I know I did. And thank you very much to both of you, John and Stormy. Thank you too much for coming and sharing today. I really appreciate you taking the time.
Ty, thanks for having us on. Loved it.
So everybody, this is so important. I preach about this all the time. It's just absurd to go apply for financing if you don't have any idea if you think you're going to qualify. And here's a technology that literally does it all for you. It tells you exactly what you need to do. All the calculations the lender are going to need are input there. It even gives you green and red, which I'm colorblind, but even I can probably tell the difference between the two. So it even works for people like me to know what works and what is a no-go. So that way you can fix the things. You can address the things that are wrong, and you don't have, as John said, the embarrassment of going into a lender and getting denied and waiting 4 or 5 days to receive that denial. So the key is to know you can get approved before you apply, and that's exactly what Leverage does. So make sure you go to leveragecalc.com. That's leveragecalc.com to check it out, to learn more and see, as John said, how to affordably take an easy step to make sure you'll know that you can qualify before you even go to apply. So make sure you visit leveragecalc.com. Thanks, everybody. Have a great day.